Welcome back. The Chamber of Mines is calling for cool heads to prevail as the gold mining sector gears up for a new round of wage talks over the next 2 months. The talks come amid mixed fortunes for the mining sector.
Since the beginning of the year, gold shares have been the top performer at the JSE as investors once again run to the yellow metal as a safe haven amid the continued fall in the oil price and uncertainty surrounding the Eurozone's economy. The gold index has risen by as much as 25%, with shares of individual gold miners such as Harmony soaring by 48.5% last month, making the company the top performer on the entire stock exchange. But analysts say the impressive share price performance is misleading. The South African gold sector is still very much an industry in decline. Profit growth is less than 10% amid rising costs, especially electricity, and there's been a spate of shaft closures resulting in thousands of workers being retrenched.
If you look at their total cost production, it's more or less what the gold price is. And in fact, if the gold price continues to be where it is at almost $1,265, chances are some of the deep mines have to close. Why we're saying that is that at the same time you get an increasing cost with the likes of Eskom, and we know that NASA just approved that Eskom can continue to increase their prices. So yes, the costs are continuing to increase, but the gold price is not going anywhere.
It is against this background that the gold mining industry is gearing up for a new round of wage talks. All indications are that the upcoming negotiations will be bruising for both employers and unions, just as they've always been.
We need to ensure that we avoid unprotected strike action, issues related to violence. And it's about calling for cool heads in terms of negotiating. We know that the industry is facing tough times, but we acknowledge as well that our employees are facing difficult times as well. They would like to have better living standards. They would love to have better living conditions. And it's about creating that balance.
The way the mining houses used to negotiate, they usually base their negotiations on inflation, And you look at our inflation, given what the oil price has done, chances are they will expect the unions to ask for something low. But unfortunately, our unions, they're not looking into that. They're looking into rent terms. So as a result, we expect that there might be some collusion.
Then there's union rivalry. The National Union of Mine Workers, which is still the majority union in the coal sector, is facing a mounting challenge from its nemesis AMCU, which has gained recognition as the majority union at Sibanye Gold Driefontein mine.
One would have expected that so far workers have realized that, whether you belong to NUM or you belong to AMCU, at the end of the day, the boss is going to be their mining houses. So if it's not realistic for them to meet your demands, then unfortunately, whether you're from NUM, from AMCU, it's not going to work out. But yes, we know that unions, they tend to use that and promise people that we'll get you higher wages, so come and join us as a union. But in reality, it doesn't work out like that.
The NUM is due to finalize its wage demands for the gold sector at a bargaining conference next month. And unconfirmed reports suggest that AMCU is doing the rounds on various coal mines, promising workers that it can get them the 12,500 rand a month, which was the rallying call which helped it to unseat the NUM as the overall majority in the platinum sector a few years ago. Mbongini Muchwa, SABC News, Johannesburg.